Flip to Freedom, episode number 19. Hello again, this is Sean Terry from the Flip to Freedom podcast. I'd like to welcome you to episode number 19, and I am here to help you escape the 9-to-5 and live the lifestyle of your dreams by learning how you can make an absolute fortune flipping properties in your spare time, even if you're brand new, you're just getting started today, and you have no cash, no credit, no experience. And the great thing about this is you can work this around your job. Now, what does that exactly mean? What is flipping properties? I have people that ask me that question. And flipping properties with no cash and no credit, is this possible? Well, yes, it is, and we're doing it every single day. And here is the boiled down, simplistic process for flipping properties with no cash, no credit, no experience, and you can work around your job. It's as simple as finding a motivated seller, getting a property at a discount, and you sign a contract with that motivated seller. Now, that could be a short sale, it could be an REO, it could be just a straight motivated seller, maybe who inherited a property, maybe they came off a sign that was placed out. But the bottom line is that sign a contract with a motivated seller for one price. Let's say that price is $50,000. And then on that contract, there will be a closing date. It's typically 30 days. Now, within those 30 days, you then sign a contract with a cash buyer, and that cash buyer will buy the property with no inspection period. They'll put hard money down, $2,500 to $3,000, and they'll sign a contract with you at a higher price. Let's call that $60,000. Now, what you do now is you have a buy-side contract with the seller for $50,000. You have a sell-side contract with the seller, or with the actual buyer, at $60,000. And now you take both of those contracts and you bring it to a closing agent, an escrow officer, an attorney, whatever your state has. You would bring those two contracts to them and you would instruct them to do a simultaneous close or a double escrow. That would result in the buyer funding the $60,000, of which $10,000 goes to you and $50,000 goes to the seller. All this is done within a week to 2 weeks prior to your closing date. And literally, what money did you have invested? Well, you might have put down earnest money on the contract, but most of the time I don't. And that's it. And you bring the contract. The buyer will pay all the closing cost that is resulted in the closing, the title fees and stuff. So your net at the end would be the $10,000 differential between the $50,000 price and the $60,000 price. That is the simplest boiled down form of flipping properties in your spare time, even if you have no cash, no credit, or no experience. It doesn't take funding. You don't have to be brilliant. It just is marketing and knowing what to do and what to say and how to do it. And that's what this podcast is all about. It's about showing you how to basically market for buyers, negotiate and get the contract, what to put in the contract, how to market for sellers, how to market for buyers, how to negotiate with buyers, and what to do with the contract and how to get it to the escrow officer and get the property closed so you can get your check. That is the basis of this podcast. Now, what we have today, as I've been promising you, is an interview with a gentleman by the name of H.L. Buster Quist, and he is a real estate prognosticator, and he's a visionary, an unbelievable visionary. And why I wanted to bring this to you today was because there's so many people that are fearful in the market. They are afraid of the real estate market, and they're sitting on the sidelines, or maybe they're working a job and they want to get out of their job, but they don't know exactly what vehicle they want to use to get out of it, or just to bring in some extra income. Well, I mean, what if you could bring in, and let's say you do 2 deals a year this way, and you make an extra $20,000 this year. I mean, what's it going to take in your current job to make an extra $20,000? Would that make a difference in your life? Well, I'm sure it would. But there are people that are fearful in this market, and I wanted to have someone, the best person I know, that could give you a perspective on this real estate market, why we're in the situation we're in, comparing it to previous real estate recessions, like in 89, 90, 91, 92, 93, and even comparing it back to the Great Depression and what happened after those time frames. See, after 1992, 93, and 94, we've had a real estate boom from 94, 95 all the way up to 2006, 2007. And people made absolute fortunes during that time. Now, in this interview, you'll see that Mr. Quist will talk about how it's different. He'll talk about market cycles. He'll compare the current market with these other real estate recessions that we had in our past history. He'll give tips, and he'll talk about his new book. But I'm going to tell you just a little bit about Mr. H.L. Quist. Not only has he been teaching real estate at colleges across the country for 18 years, he's also predicted since 1987 every major real estate downturn, and he advises people through his newsletter what to do. And he has been right on 100% accurate. And it's literally, like I said, it's amazing to see how accurate he has done. And he has, thousands of people that follow him in what he has done. But we have, I've been chasing him down to get his time, and I am so appreciative for him to be able to to spend the time with us today. But he has traded commodities. He gives stock market recommendations within the stock market. He also was a developer. He actually bought properties and land and entitled it and sold it and developed those different. So he has a broad knowledge when it comes to real estate, when it comes to markets, and he's also a historian. His studies is in past history. And so to have him spend his time with us is truly exciting. And it'll basically, after you're done listening to this interview, I just want to go do more, I guess, and be more, buy more real estate, because we are in a window right now. It's a once in a lifetime opportunity that we are sitting here right now. And when you listen to him explain this window that we're in, you'll be amazed, and that's what I am, excited about for you to listen to him today. But he's going to talk about, the current market data and where we're at and where we are in the market cycle. So, I will see you on the next side, and you will get to hear this interview with Mr. H.L. Buster Quist and learn the depth of his information on his predictions where we'll be in the next 3, 5, 7, and 10 years. So I hope you enjoy it, and I'll see you on the next side. All right, I have an incredible interview for you today. I'm so excited to share with you folks, and it's with a gentleman by the name of Mr. H.L. Buster Quist. And first off, Mr. Quist, I'd like to thank you so much for taking your valuable time and spend time with us here on this interview. I greatly appreciate it.
John, I appreciate the opportunity to speak to your folks.
Yes, I'm extremely excited about this, and I can tell you, I'd like to start off first off on the aftermath of greed. And first off, I bought that book. I think it was almost about a year or so ago, and I devoured it in a matter of, I think, one sitting. I read the entire thing, and I was literally blown away. And some of the predictions that you've stated in your Greenspan plan and some of your other things are amazing. And actually, one of them was talked about the onset of the recession, and you nailed that pretty much on the head, didn't you?
Well, yeah. In fact, I was holding. I've taught real estate CE classes for 18 years now, and the school that I was working with, we put on a series of seminars in July of 2005, if you can believe it. And what the problem that realtors were having then was that they couldn't keep a listing. I mean,
Right.
get a listing in 3 days it'd be sold. And so I came up with this idea and this program for particularly aimed at realtors is to go to people that had large homes here in Scottsdale, PV, and so forth, and encourage them to put them on the market, take advantage of their $500,000 tax-free money, and downsize. So my program was downsize now and securitize your future. And basically I said this market is going to collapse, and there's a lot of people out there in their 60s and 70s that have a lot of net worth, but they don't have investable cash liquid assets that will produce an income that they're going to need in the future. And it fell flat.
Yeah, and it's honestly, I mean that was a brilliant call. Actually, at the time we owned 120 rental properties during that same period of time, and we accumulated between 2003, 2004, and early 2005, and we actually sold the entire portfolio between May and November of 2005, and it's unbelievable. But you also made another prediction, and I'm going to tell you these predictions are amazingly accurate. Another one, you said that the stock market would decline between 10 and 30%, and then you look back at March of 2009, we actually hit 65.47, which is probably what the lowest we've seen in a long time. But I mean, how did you nail that on the head?
Well, I've been involved in the markets all my career. Very early in my career, I owned quite a bit of real estate, rental properties, and vacant land, and so forth. But I was also very active in the markets, particularly as a trader and trading for my own account. So,
Really?
I was in my 20s, and I was actively trading in all the markets, including commodities. And the commodity story I tell in my second book will blow most people away. Where I pyramided $7,000 into $250,000 in 3 months. In the commodity market.
Was that on gold, or was that like on cotton?
No, that was in cotton of all things.
Really?
Yeah, and of course, $250,000 in 1967, 68 time period. It's worth about $1 million today.
Right.
So, that was. So I got a lot of firsthand experience, and but I made it a point after the 1990 crash in real estate is to find out what in the heck causes these boom and bust cycles. Did a tremendous amount of research and reading, and of course with my personal knowledge and experience, I put the two together, and that's, of course, I put in that book because I felt that background and that history would be invaluable to people, whether they're in the real estate business or investing for their own account, or just for planning ahead.
Yeah, I mean, absolutely. I mean, like I said, I read that book, and I was to understand what has really happened during this, this aftermath of greed of what's happened has just been amazing. And then you actually did a prediction that the government would come in and do massive bailouts and take over Fannie and Freddie. And like I said, it's so scary, it's scarily accurate of what these predictions that you have done and how they amazingly have come so true. It's like I mean, do you have like a crystal ball that we just don't have, or is it just the depth of knowledge?
A lot of people think I'm a visionary or a futurist, but I base it all on fundamental knowledge too. I told my real estate classes in 2004 that Fannie Mae and Freddie Mac, I called them the evil twins,
right,
would fail. And of course, everybody was raising their eyebrows, and of course, didn't believe what I had to say. But what I knew, of course, then was that they were cooking the books, and I knew that they had a scheme going on between countrywide, and Congress was mandating the quotas for lending in to people who couldn't either afford or pay back the loans. And I pretty well sized that up, and Raines was paying himself at Fannie Mae his huge bonuses based on fraudulent numbers. So, I felt that it was just a matter of time before that whole thing cratered.
Right. Well, you pretty much nailed that on the head as well. So, And it was funny. I was reading an article from Mason Walker at Johns Hopkins University. He was talking about market cycles, which I'd like to get into and see how this whole prediction thing and what you've shared in your books and then bring it back to where we are right now. Is that when we talk about market cycles, in this article he was saying that there's expansion, which we saw, and then there's hyper supply, which we definitely saw in 2005 when home builders were building like crazy and selling houses on auction, and then after the hyper supply there's a recession. And then after recession, they have recovery, and then it goes back around again to expansion, hyper supply, and recession, recovery, and it continues through this cyclical process. So we are right now.
But it is different this time, Sean.
Oh, it is different.
Well, it is different because of a lot of reasons. But right. I mean, one of my forecasts that was wrong is that I thought that the market would have been recovered by now.
Right.
But when I discovered the depth and the extent that Goldman and some of these other people on Wall Street had created these credit default swaps and so forth, and what I call avatars, they created this tremendous leverage with derivatives that on assets that didn't even exist.
Right.
I mean, there weren't any underlying mortgages or borrowers or anything on these swaps that they created and these derivatives that they created. So it had to collapse.
Right. And so if we take a look at that, and it might be different. So how would you relate? Or I guess what are the similarities and differences between this typical recession? I mean, this recession and recession of say the late 80s and early 90s. I mean, what is the difference between those?
Well, one thing that's real interesting for our audience is that, when you look at I was heavily involved in development
right.
during the 80s, and in 89, of course, the real estate market collapsed. And what led to that, and people don't remember this, and I didn't know it at the time, but my research bore it out, is that what really propelled the real estate development, particularly in the commercial end of the business in the mid-'80s, was the bankers, the worldwide bankers, got together at the Plaza Hotel in New York,
right.
and they concluded that the dollar was too strong. Remember, interest rates were very high, junk bonds were popular, financing was 14 and 15%, and of course for that there was a strong dollar. Right. So they agreed to devalue the dollar, and we were in the midst of developing this project, and we were having a hard time finding money and for land acquisition. And lo and behold, the bankers that had turned us down came walking in the door, say, "Hey, that loan that we rejected here about a year ago, well, we're in a position to talk to you about that." So that propelled the commercial end of the market just tremendously. From that Plaza Accord was in 1985, mm-hmm. but by 1987, the bankers concluded that the dollar was too weak. And so they reversed it, and of course the first thing that happened was that the stock market collapsed in October of 87,
right.
and that ultimately led to the real estate collapse, and because there was an overbuilt situation as far as the commercial end of the business was concerned. So what's going on at the fiscal and monetary level and the global banking area is very critical for our markets on a local basis.
Right. So basically in the late 80s to the mid 90s, what happened was there was obviously a massive. The RTC came over and had to liquidate properties for pennies on the dollar, and then at that time, but there were people that took advantage of that opportunity. I mean, look at Robert Sarver, who owns the Suns. I mean, he bought land in Tucson, for pennies on the dollar from the RTC. He entitled it, he split it into lots and sold it to home builders, and during the boom that came after that, and made a fortune, and he owns banks, obviously, and eventually owns the Suns. But so now during that period of time, what happened after? Like 1993, 94, 95, 96, was that the expansion time frame that and then we led to a...
Well, certainly. What the reason why the real estate market bounced back so quickly after that, it was devastating when FIREA was enacted in in 1989.
Right.
I mean, it just dissolved every savings and loan in the country.
Wow.
They closed every S&L. But here's what was different, in my opinion, is the Resolution Trust, everybody, badmouthed it and everything else, but what happened is they took control of all these properties, they wrote them all down, the developers went bankrupt, and everybody, they cleaned up. Within about 2 or 3 year period, they were able to turn that market around because debt had been dissolved, and it had been written down and written off.
Right. And
then they liquidated the properties to strong hands like Sarver and others that bought the properties from the RTC. And I told a 1993 group, a real estate group, that get ready for the coming boom in real estate.
Really?
And because I knew FIREA had expired, banks were not able to make loans, real estate loans, for 3 years under FIREA. And of course that expired in January of 1993. And I could see all the other things falling into place. And of course that was the beginning of the longest and most appreciation in real estate in American history, from 93, of course, to 2007.
Right. So yeah, because the banks loosened their credit standards and people could get financing pretty much anywhere, which, if you have available money in the marketplace, then it becomes, easy to buy real estate. And then it got a little too loose, obviously, in 2004 and 2005, where they came up with these crazy loans that they did, and which fueled this market. But now let's look at that. So basically there was, during the RTC, it was terrible. I mean, people were, it was probably the worst of the worst. Everyone thought that real estate was the place not to be. And then after that period of time, people that had a vision like yourself and others that turn around and was able to position themselves could capitalize on the upcoming boom that happened, through the next, handful of years. Now, let's look back at, say, the Great Depression during that time frame. What, I know that's going a ways back, but what happened, during the Great Depression? Obviously, there was, is a tragic time. But what happened in the years after the Great Depression?
Well, of course, you get, that was kind of an anomaly, because I talk a lot about that in my second book, which apparently you haven't read, which is How to Profit from the Coming Inflationary Boom.
Yeah, and I actually have it right here. We're going to talk about that.
Okay, I see, okay. And, what people don't remember about the recession is that, the government got involved and it confiscated the gold and so forth, and they revalued the gold, and that they started all of these OPA, and the Works Progress Administration and so forth. They created all this stimulus, which we're going through right now, and it worked for a short time. Unemployment went from 25% down to 15% by 1936, but by 1938, a second recession, a recession within the Depression, began. And that people don't remember. And the stock market then absolutely plunged. The Dow Jones lost 90% of its value from the top in 1929. And things were looking dismal. And I have that famous quote by Henry Morgenthau, who was the Secretary of the Treasury in the Roosevelt administration. He said, "Here, we've borrowed all this money, we've spent all this money, we've created all this federal debt, and it hasn't done any good."
That sounds familiar.
And of course, that's kind of where we are right now. But of course, what bailed out the administration and Keynesian economics in that period was, of course, the Second World War.
Right. So after that point, when went all through that, there was a boom after that Great Depression, I assume.
Well, and there's another strange fact there too, Sean, that people don't remember, of course. And I was alive at this time, and I wrote it in a family history. I wrote because I am a historian by background and education, and what people thought that after the war ended and all the GIs were coming home, these are millions and millions of people in uniform coming home. Everybody thought, well, the bankers thought that we'd go into another depression because all these people would be coming home looking for work, and the work wouldn't be there.
Right.
But that was I have so many friends that went into the building business in 1945, 1946, and there was such a demand for housing. All these GIs coming home were wanting to raise families. There was a shortage of material. There was a shortage of homes. they were living in almost in tents. And of course, that's when these what was that famous project in New Jersey?
Yes.
There was the first mass marketing of homes and mass building. I've forgotten the name right now, but I mean, homes were selling for $800 and $1,000 after World War II, and of course, that was the beginning of tremendous expansion. But there was an awful lot of people that felt that the economy was going to fail again.
Right. Right. So now we take that information back from these two previous recessions, and we know this is obviously different in its own unique way, and then we look at, and then we come back to now your book, which is How to Profit from the Coming Inflationary Boom. Now, how does that tie into where we are right now? I mean, I'm sure you saw last week's data. It says, the housing data, 27% decline, which is a record decline.
I saw it. And I got, yeah.
In July. Now, the thing is that, now I was expecting some sort of decline in July, obviously, because the June, tax credit expired there, for the tax buyers there. But I mean, you look at that, and you look at the decline in there. You look at the, the 4 million, of inventory, 1 year supply of inventory on the market, of that, and then you have the shadow inventory that's kind of hanging over. So that's one side of the spectrum. Then you have 4.5% interest rates, and you have affordable housing on the other side of the spectrum. So you look at where we're at right now, and we're going, okay, if we're in the if we've done the expansion, we did the hyper supply, we're in the recession. If a recession was a timeline of, say, a year, 1 to 10, where would we fall in that recession timeline? Would we be at 4 or 5, going in that recession timeline, or are we in the 6 to 7 in that recession timeline? Would you say?
Well, why it's different this time is let's take that 1990 period in the early 90s, is that debt was written down and written off.
Gotcha.
And the supply and demand factors. I mean, the properties that were purchased by Sarver and others, they were in strong hands.
Right.
And of course, these folks were confident that the market would turn around. They weren't risk adverse like people are today, and they bought these multifamily. I can remember buying these units out on the west side. The new apartments had only been up a couple years for $10,000 a unit.
Wow.
That had previous to the crash had sold for like $30,000 a unit. But anyway, that enabled the fact that all that debt was written down and written off, and the property was in strong hands that could afford to wait out the the recovery.
Right.
Made a big change, because what we're dealing with is this massive overhang, not only of inventory but debt, and people are risk adverse. That's the big psychological change, because people are saying over and over again, I don't think this thing is going to get better.
Right.
I don't think home market's going to come back for years and years and years. And one reason why that's true is the massive amount of federal debt and of course high unemployment. But we've been through that before. But it's the fact that this was not written down. I mean, I envisioned to deal with this problem, a residential resolution corp. Instead of, the RTC, have it a residential, and that's what made the commercial market rebound so quickly in 1991, 92, 93, is that all these commercial properties were in an overhang on the market.
Right, they wrote
because they were in strong hands, and today we don't have that. We don't have that existing at all. And I speculated that there was a big rumor that Fannie Mae and Freddie Mac would be involved in 15 million mortgages. They would be paying down and offering just pay down of the mortgages equal to what the market value was of the $15 million mortgages that they had that were underwater. And there's all kinds of speculation, and no decision is going to be made until January.
Right.
But it is different today than it was. My forecast for rebound, I forecast in March of 2009 that we were on there was going to be a turnaround, and it certainly was in the equity markets and in the commodity markets, but real estate had still this massive overhang that it couldn't deal with. And in May of this year, I reversed my position, and I said that the markets were going to go south, and that had my investors liquidate their equity positions in U.S. equities, and I'm writing a newsletter, monthly newsletter, and I'm advising people what to do as far as the markets are concerned. So we're in real limbo right now. We don't know where this thing is going, and I gave a talk the other day, and I said, well, there's really three options. We know one thing for certain, that Ben Bernanke and the Federal Reserve Board are going to do everything within their power to prevent a depression, the 1930s depression. And so we have to factor that into our assumptions, and that means quantitative easing, or they're going to print as much money as needed, and the Fed's going to buy as many assets as possible. And of course, they basically have an unlimited supply of money because they create it out of thin air.
Right.
But that's what's coming. In my opinion, that's what's coming, is quantitative easing. And usually what results from that is massive inflation. And
so
in
the
the early
devaluation of the dollar, which would create massive inflation. Right. So let's talk about that real quick. Okay, let's say this theory holds true, okay, and we do have the massive inflation. The government comes in and steps in and does whatever they're going to do to magically create supply and demand in the housing market. And let's say theoretically it's mid 2011. What does or whatever 2012 or 2000, whatever that is, and for a time frame, what does our world look like? I mean, what are gold prices instead of 1240 today? What are gold prices in this inflationary environment?
Well, people say, well, you can't have inflation with high unemployment. Oh, yes, you can. And of course, what I impress upon my audiences, and particularly realtors and real estate investors, is that you can have asset inflation without wage and price inflation. In other words, the goal of the Federal Reserve and of the politicians today is that they want asset prices to rise, particularly real estate. And if you devalue the dollar, the offset to that is an increase in asset prices.
Right.
And that would be commodities, that would be stocks, and that would be real estate. So that is the scheme, the federal government is going to try to inflate their way out of this problem, because debt is a constant. If you have a $100,000 mortgage on your house, the only variable is the market value of that house. And they can increase the market value by cheapening the value of the dollar. And a lot of people can't see that simple equation, but that's the game plan, and that's the strategy that the politician and the bankers are going to use.
Okay, so in this world of devaluing the dollar and having this inflationary boom, we obviously see house prices increase, just like you're talking about. Commodities increase. So if that's the case, if that's the way we're going to get out of this, whether they write down a ton of debt or they inflate us out of this mess, in any case, from a real estate investment perspective, to be able to buy properties today in this window of opportunity we have to be able to buy cash flow properties, or be able to buy and renovate properties, or whatever it is. I mean, do you see where people they'd be crazy not to do something like that? I mean, to look at real estate, if people are on the sidelines and they're going, well, should I get in real estate? It is uncertain, but then you see quotes like from Warren Buffett that says, be fearful when others are greedy, and then greedy when others are fearful. So if you take that in a perspective, everyone's afraid of real estate right now. It is uncertain, but you do have low interest rates. You do have, properties that are, at the lowest levels they've ever seen. And then you look at that and go, why not be able to buy real estate that we know potentially it's going to inflate down the road? As long as it can cash flow and it can sustain itself, then that would be a sound investment. Would you agree?
Well, I think that one real critical factor in all markets, there's three things that move markets, and that's what the Federal Reserve does, obviously, the aspect of money. And two, what Congress does in the way of legislation. But the third element is sentiment.
Sentiment.
And public sentiment, as you put your finger right on it, is that there's a lot of fear out there. People are risk adverse. But you know, there's something else that's happening that I got a real good, I kind of had an epiphany as I was touring real estate and looking at real estate up in the up in Montana, you know, up in near Iron Horse, which is one of the most upscale. This is Whitefish, Montana, Whitefish Lake, and the Kalispell area. And you know, these people from Silicon Valley came in there and California and built these massive McMansions up there at Iron Horse.
Right.
You know, $5 million, $10 million, $15 million. I mean, these are summer homes, you know, ski cabins. I mean, it's just unbelievable. But you know what's happening here, Sean, that I think that maybe that help our audience is from a different perspective, is that what we're seeing now is the end, I called it the end of the age of opulence. People, when they're looking at residential property now and other assets, they're going to be looking for value. Mm-hmm. And I would encourage, as I did in this book that you know, the yellow book there, the Profit Book, is that if people are looking for a home and they're going to raise their family there and they're not thinking in terms of what the investment aspect of this is a wonderful time to secure that real estate at, you know, 30, 40, 50% below what the perceived value was.
Right.
So that's one, I think that's one area, one market, you know, the user, the buyer, and of course, whether it's investor-owned is immaterial. I mean, that's an opportunity, and I think that market is going to expand. Mm-hmm. All right. I think we're going into a new era, but this inflation situation is a big unknown. Because I always have said that in early stages of an inflationary cycle, like we saw in 76, 77, 78, boy, you made money in everything. Right. People say, well, you can't, real estate prices are not going to rise if interest rates rise. My God, interest rates, 30-year fixed rates in 1976 were like 8%. They went to 17% in 4 years.
Right.
But that didn't deter people from buying residential or commercial real estate.
Right.
And people saw that, you know, there's two things that are going to change this picture. One is loss of confidence in the government and loss of confidence in the currency. And we're on the cusp of that happening. There's certainly been a lot of confidence lost in this administration, just as there was in Jimmy Carter in the 77s. Whether you're Republican or Democrat doesn't make any difference. You lose confidence in the way the government's being run, and lose confidence in the currency as they keep printing trillions and trillions of dollars of it, then people want to convert the currency to hard assets.
And that's
there's not a better known, a better hard asset known to most people than real estate.
Yeah, and the thing is, I mean, real estate is a commodity essentially, right? I mean, you have lumber, and you have all the aspects to actually build a property. I mean, the amazing thing is we're buying properties today in this market that are back to 1998 prices. I mean,
of course,
it's amazing to see, and it's funny. It's talking to some of these the sellers, and they're going, well, wait a minute. I bought it for more than that in 1998, 97. Sure. And I go, well, hey, this is what is happening in this marketplace right now. So it's almost like for me, I feel like it's a land grab, again, almost like it was in, 2005, but a land grab, even though we were selling everything, it was a land grab to try to, get as many properties, as we possibly can that will cash flow, that will be, good deals, obviously, that when the market does come through and we go through from the recession to the recovery, and then we have the we put the hyperinflation wrapped in that as well, that that these assets will increase in value, just from an appreciation standpoint, but all just from a cash flow standpoint as well.
I told the real estate audience a couple weeks ago, I said, if you're buying real estate as you're doing right now, have an end goal in mind. because if we, in one chapter I devote entirely in the new book to hyperinflation.
Right.
Because the American citizens know absolutely nothing about hyperinflation. If you were Brazilian, or if you were Argentinian, or if you were Mexican, and you'd lived through that in the 80s of 10,000% inflation in a year, you would understand what hyperinflation is. But since Americans don't know, they need to educate themselves, because this inflation, a little inflation would be good. A lot of inflation would be terrible.
Right.
And if you're buying homes like you're doing right now, or buying real estate, so forth, have that goal in mind, because you need an exit strategy. All hyperinflations end up in the bubble bursting, and a terrible deflation will follow an inflationary cycle that morphs into hyperinflation. So I don't know whether this is a year, 2 years, 3 years. We don't know. We don't know what the timing is.
Right.
But I'm of the belief that in 2011 we're going to see inflation start to take off, and in the first maybe a year it will be very beneficial to all the markets as the dollar devalues. But where we go from there is it requires whether or not the banks are really going to get involved in financing investors, in doing real estate financing. That's the key to inflation taking off and being in this instance successful. Is you need that financial medium that is the source of course, the inflation.
So that's basically the core of your book on how to profit from the coming inflationary boom and avoid the next crash. So in that book, it gives some specific tips. You could tell our listeners some specific tips that they can be able to capitalize. And I'm going to have links in the on our blog at flip2freedom.com. Back to your website at the Aftermath of Greed updates and that, and I'll do that. But what's some specific some tips that you would give of how can someone capitalize on that? Right now, if they're kind of maybe looking at the real estate market or looking at the market in general, they are fearful and they are sitting there going, okay, well, what do I do? Well, should they just sit on the sidelines and kind of just see how everything plays out with the elections coming up and all this type of stuff, or should they actually get involved and start doing some research and start maybe looking at different investment opportunities? What would you suggest?
Well, I favor, as I said a little earlier, I favor the fact that they're going to. I'm going to follow Bernanke's lead. I always watch what they do, not what they say.
Right.
But I believe that they're going to provide as much equity and liquidity into this market as necessary to keep the banks from folding and to keep the economy going. And I feel that if you take that assumption, if you take that premise, then we're at or near the bottom. Certainly, the election is a factor. But when these wealthy investors came in and bought real estate from the RTC in 1990, 91, 92 time period, they didn't know. There was no guarantee that the market was going to improve. I mean, they were buying multifamily, they were buying commercial properties, they were buying shopping centers out in Gilbert in which they didn't have a single tenant.
Right.
I mean, you talk about potential downside, but I feel that if people are liquid enough and have a reserve. I spoke to 2 real estate groups in the Silicon Valley earlier this year, and I said, if you've got the reserve and you've got a full understanding of what the risk is, sure, it's a great time to buy real estate. And as it's proven to be out in Cupertino, well, the real estate market has turned around out there, so there wasn't that much risk out there in me saying that. But I mean, that's true here also.
Right.
I believe, Sean, that there is going to be some major announcement coming from this administration on addressing the residential real estate market. I just, all the rumors that are, I can see a new entity, a resolution trust entity being formed to buy up these mortgages, because there is enormous overhang. That's what makes this market different than any that we've been through in the past.
So it could be this Homeowner Debt Forgiveness Act that's like been floating around.
That could be that. They could be a new entity like the RTC that would buy up mortgages. There's just a tremendous amount of banks that still are carrying, residential mortgages, and of course Fannie Mae and Freddie Mac. There's a major article in Barron's this past weekend that they're going to dissolve Fannie Mae and Freddie Mac and create a new agency, and I think that would be the entity that would be buying up these mortgages. Or there could be moratoriums. During the Depression, there was a moratorium. Mm-hmm. They couldn't foreclose on homes. They kept people in their homes. They kept people on the farms. So because the banks couldn't deal with that amount of real estate. They couldn't manage it, and they couldn't deal with it.
Right. And the thing is, what's amazing is I deal with a lot of cash buyers that buy properties that that don't fit our essential, our business model for our fix and flip or our cash flow properties, but they're buying them for either rental properties for themselves or to fix and flip themselves. It's funny, there is a different mindset of someone that has the amount of liquidity that can purchase, a lot of different properties at this time. They want people to be fearful. They want people to be scared and not come in and compete with them, at the courthouse steps or at the bank, the bank-owned homes and stuff, so they can come and get those offers put in to get those properties at the lower prices. So, when I do talk to a lot of these, individuals that are purchasing properties, a lot of properties, they're looking at it going, they want the market to stay kind of like this for a length of time so they can build their inventory levels and then be able to kind of sit back and collect the cash flow. And it's a different perspective or different mindset from someone that's maybe working a job, or they're looking at or maybe got laid off from a job and they're going, they're scared because the economy might crash. But how do you feel about that? It's amazing to see.
Well, a contrarian, that's the name of my newsletter, the Contrarian Market View. I mean, I'm always buying when people are fearful, and just doing the opposite of what. And in the stock market now today, the bullish sentiment is down to 20%.
Wow.
Which is unheard of.
Right.
So from a contrarian point of view, this is the time to buy stocks. I'm not doing that as yet. I haven't. I don't have the faith in that. Obviously, the election is a big thing.
Yeah. Yeah.
And I also said in my newsletter that if the Republicans take control of the House, there'll be a big market rally.
Right.
And I think that will also impact the real estate market.
Right. Absolutely.
Because business, people with cash now are indecisive because of the political situation. They don't know whether they should invest or not invest. So that's an overhang that that we haven't dealt with in a long time. That's also present.
Right, and that could resolve itself, when this potential announcement or the elections pass or something eventually happens which could eventually spur either a positive or a negative in the market, depending on how the announcement is, digested, I guess you could say.
Well, yeah, I think that's an X factor. There are a lot of X factors out there that most of them you don't, or the black swan as they call them now. Right. Instead of X factors, they call them black swans. And there's war, there's all kinds of things that terrorism attacks and that type of thing that always present, as a potential factor that will intercede and affect the markets. But you can't invest and you can't plan, for
otherwise
to happen.
You'd be on the sidelines forever.
You'd never make a decision. That's right.
You'd never make a decision. You'd be paralyzed by fear and all that stuff. So all I know is, from I guess from my perspective and hearing from your perspective in your books and stuff, is that I'm excited about this time, and I know so many people say that oh my gosh, it's terrible, life sucks, we're in a recession, but for every opportunity, for every disaster, I guess there's the like Napoleon Hill says, there's a seed of equivalent benefit. So finding that is finding properties that are low and interest rates that are low and inventory that is available. But so for your book, How to Profit from Coming Inflation Boom, how can someone get a hold of that? today?
Well, you can do it on the website. I would, for our listeners today, the books are $20 a piece.
Okay.
But I'll make it available to your listeners for $30 for both books.
Okay. Wow.
And if another offer I would like to make is that my newsletter is monthly, and it's $99 a year. Okay. And it's got all kinds of market information. There's about 30 or 40 stock recommendations for people who are interested in the markets. But I will make both books free, available to them free if they'll sign up for the newsletter.
Okay, so let me get that. So you've got both books. You got How to Profit from the Coming Inflationary Boom and to Avoid the Next Crash, right? And
Correct.
Also the Aftermath of Greed, Get Ready for the Coming. So both of those books, they'll get free if they can sign up for the yearly your newsletter there, which will come out monthly. Is that correct?
That's correct.
Wow,
and,
that is.
So I want
to do that. I greatly appreciate it.
Well, I think this is, I appreciate the opportunity to speak to you and your people, and I just think that I've done that in my real estate classes, and people have just jumped at the opportunity because they know what my track record is. Many of these people have come back now 4 times, 4 or 5 times for the renewals of their licenses. And they recall, I've since 1987, I've forecast every major turn in the market. So, they place a lot of value, and we've had people come to that did take advantage of my advice in 2005 and 2006 and sold their real estate, and they stand up there and give testimonials, and boy, I tell you, some of them bring tears to your eyes.
Wow.
They're powerful.
Yeah, that impacts someone's retirement, their life, their lifestyle, their kids'
people
lifestyle.
Say that by selling their real estate in 2006, that it saved their lives because they were highly leveraged, and for every one of those, of course, there's probably 8 or 9 that didn't do it out of 10.
Yeah, but you know what though is that you've established so much credibility, and you've put some great work in your books and in your newsletters though that now people can be listening to this today, and they've got 2 options. They can listen, right, and learn and digest your information and take it to heart, or they can say, well, I'll just keep doing the comfortable thing, I guess what it is, and doing what I've been doing, but you never know what the results could be. You never know, but to have that type of track record to literally predict every market turn since 1987 is I'm just honored to be on the phone with you, to tell you the truth. I really appreciate it.
Well, I appreciate the opportunity. I just think it's one of those unique. This is a unique moment in time in our lives, and we just don't know what the future holds. But long term, you can't go wrong in real estate. You just can't.
Right.
But you got to be in a position, that people know now that deleveraging, the disaster of deleveraging can be a lot more impact than the advantages of leverage.
Right.
We've all learned that now, and of course I've known that for a long time. But the people that are not risk adverse, this is a fabulous time to acquire real property.
Right. Well, great. Well, I think I've taken up too much of your time, so I apologize for that. But
we could talk for hours.
Yeah, I know.
I think we've made the point that we want to make is that this is a unique moment in time, and this change in people's thinking, and looking for value and looking for functional versus flashy, and looking for making rational decisions versus reckless decisions. This is a huge change in sentiment, and we ought to apply that change to our marketing plans as far as real estate is concerned.
Yeah, in 2005, I remember they were doing seminars to have people buy real estate, and it was okay to have a $200 or $300 or $400 negative cash flow on the property because, the property will appreciate, and then, guess what? You'll be saved and everything will be fine. But, if you preach cash flow and you have $200 or $300 or $400 or $500 of cash flow, then guess what? You're insulated from, now, could the market decrease another 20, 30, 40%? I don't know. I don't think so. I don't think it could decrease that much, but I could be wrong. I'm not the prognosticator.
No, I don't think that will happen, Sean. I think that the market should just be flat. In other words, one of the three scenarios I paint is the fact that we could go through a period of slog, that the economy would just kind of limp along and unemployment would stay at 10% and so forth, but we wouldn't see any market change. You know, the stock market, the commodity market, the real estate market would remain flat for a prolonged period of time. But I don't see the full out, you know, depression that we saw in the 30s. I just don't see that happening.
So almost like a, you know, what they call is a hockey stick recovery then, right? So, you know, where it goes along pretty flat, you know, along this long period of time stick, and then all of a sudden, you know, either something happens or whatever, and then we end up increasing, you know, go up from there, whether it be a pent up demand or whatever.
Well, here's what the bankers think. Here's what Bernanke thinks, and he's an expert on the Depression. They feel that they can deal with inflation, that they can control inflation. I don't necessarily agree with that, but that's what the way they think. They cannot control, and they cannot, once deflation sets in, they're in deep trouble. And so they're going to do everything they can to prevent a deflationary and a further write-down of real property values. So taking that as our charge, we should base our decisions on that premise.
Very interesting. Words of wisdom. All right, so first, someone's going to find you. They either can Google the Aftermath of Greed updates, and you have a blog that's
well, if you put it on your website, I mean, it's kind of a long blog site. I mean,
I'll put a link on my website, or if they want to Google that, they can get there. And you actually,
but it's to take advantage of this special. They'll have to email me, because if you go through my publisher, or you know, they won't be able to make a deal. So this deal that I sent, as far as the discount on the books are concerned, that has to come through me. So let's just use my email address, which is hlquist@cox.net.
HLQUIST@cox.net. I'll put that on the site as well. Okay, so email you at hlquist@cox.net, and you will get both books, the How to Profit from the Coming Inflationary Boom and the Aftermath of Greed, and also to the monthly newsletter for $99. You get both of those if you email Mr. Quist at hlquist@cox.net. Well, that's great. Well, I want to again thank you very, very much for your time. Your information and insight has been priceless, and I am so excited to you know, keep reading your books and your information and keeping updated on your blog and stuff. So again, I definitely appreciate your time this afternoon.
Okay, and let's do a follow-up, and let's you and I at least follow up with each other, and as this market plays out.
I will do. Love to do a call back. Thanks for your time, and take care.
Thank you. Bye-bye.
Thanks. All right, I hope you liked that interview. Wow, that was awesome. So just to recap real quick, he has you can get both of his books. Now I'll have a link on the website at flip2freedom.com. That's flip2freedom.com. But I'll have links on the website to his website, along with his email address if you want to request his annual newsletter for $99. Plus you'll get both those books, How to Profit from the Coming Inflationary Boom and How to Avoid the Next Crash, and also the Aftermath of Greed. So, awesome. Now, I want to leave you, if you're excited, you want to get involved in real estate. Now, don't forget, I wrote a 129-page book that you can download for free at flip2freedom.com. That's flip2freedom.com. Just go to the website. You'll see a video of me. Just put your email address in the box, and I will email you a special link to this report, and it goes in depth on how to capitalize on this current market right now and set yourself up financially for the rest of your life. It's flip2freedom.com. Now, I want to leave you with this quote. If you're excited, you want to get involved in real estate, you just don't really know how to do it, I would first say, go read the book, listen to the past iTunes episodes, the past podcast episodes I have on the site there. But I found this quote. It's from a Chinese educator that was born in 1884. He's a writer, philosopher, and a diplomat. He's wrote some books. Tai He. And he has this quote that goes like this: action will remove the doubt that theory cannot solve. Now, I love that quote because action is the number one ingredient for success. You can theorize about it, you can listen to the information, you can read the books and listen to webinars and jump from one exciting program after another and get wrapped up in this. But the bottom line is action is what it takes. And what happens is people have fear to act. They have fear of what's going to happen. You know, I don't know, and they project into the future these things that these potential problems or obstacles that might come up. You know, what am I supposed to say to the seller? What if he does this? And what if he does that? What if he knows I don't have any money? All these different things that people project into the future that blocks them from actually taking action. But guess what? Taking action, that action alone will remove the doubts and, you know, that theory cannot solve. And see, that's why I love America, because we have the ability to go out and take action on our dreams. And by seeing it, and we can believe it, and we can go out and we can put forth the effort. You know, if I you know, go out and I look at an action, you know, or if I'm going to have to go do something. I remember the first time when I spoke in front of 1,000 people when I did sales training for the previous company I worked with, and yeah, I was, you know, nervous. I never ever spoke in front of that many people. I was down in Florida, and there was 1,000 people in this room. You know how intimidating it is when you walk in and there's 1,000 people, and I'm the new guy. They hooked me up with a mic, and they said, okay, you're up in 5 minutes. I remember I walked into the bathroom, and I was sweating. My palms were sweating. I was shaking. You know, my throat was dry. My eyes were like almost glazed over in you know, of just the adrenaline of fear that was going through me of myself projecting into the future. What could happen? What if I pass out? What if I say something stupid? What if I trip when I go upstage? What if? And finally I just stopped. I looked at myself, and the quote from Wall Street came up. And I don't know exactly what it is, but Bud Fox, he looks in the mirror before he goes in and sits down with Gordon Gekko for the first time, and he goes, life comes down to only a few moments in life, and this is one of them. And that's why I said, you know what, life comes down to only a few moments. And don't quote me exactly, because I don't know if that's exactly it, but it comes down to a few moments when you're challenged. And then guess what? He buttoned up his tie, he closed his jacket, he swallowed, and he walked into Gordon Gekko's office, and he sat down, and he did his pitch. Now, it wasn't perfect, but guess what? He did it. And that's what I did. I was sitting in the bathroom looking at myself in the mirror that day, sweating, fearful, and I said to myself, life comes down only a few moments, and this is one of them. I buttoned up my tie, I, you know, put on my jacket, and I walked out of that bathroom with a new, refreshed attitude. Instead of being fearful and projecting thoughts of fear, I started going, you know what, I'm going to kick butt. I'm going to crank this thing out. I'm going to rock the house. That's what I said, walking out of that bathroom. Because you know what, life comes only down to a few moments in life. We got to take advantage of it. And this might be your moment. I don't know. Maybe or maybe not. I know it's a big moment that we can take advantage and, like I said, set our family up for the rest of our lives. And I walked out on that stage, and literally, I cranked it. I mean, I surprised myself on the not how good I did, because I'm not, you know, from an ego standpoint, but I'm saying is that the response from the crowd was amazing. A standing ovation, and it was amazing. and it was just being real and being nervous and just doing the best I can. I can also tell you exactly what I did too. Before I walked up on that stage, I asked God for help, and I asked him to direct my thoughts and help me do the best I can do. Because like I said in the last couple episodes, it's very difficult to do big things by yourself. If you have a helping hand, it's always better. So anyways, that is it for this podcast. I hope you absolutely loved it. Go to flip2freedom.com, download the book, and you know what? Read it. Just don't download it and have it sit on your computer. Read it, because I know you'll love it. And you can take the information, you can apply it tomorrow, and you can start getting results. And like I said, what if you just do a couple deals a year? You make an extra $10,000, $20,000, $30,000 a year. Would that make a difference in your life? All right, until next episode, I wish you ultimate success in your real estate investing career. And take care, and God bless.